Hello, and welcome to the channel. I'm the Coins Monster. What's up, guys? Thank you for tuning in. So, today it's a very special episode for you guys, for me, well, for everyone, really. And I have a guest, an excellent trader. We've seen him in the live streams chat before a few times, and he's kindly agreed to come and show us a little bit of his view on the markets, what he does, how he does it, and his expertise. Okay, he's done extremely well. So honestly, it's just kind of a privilege for me to be able to get that info out to you at this stage when my channel is actually relatively new. Okay, so I'm gonna thank every single one of you who's made this happen, and I hope you guys stick with me forever as long as this channel is running, and I don't plan to end it anytime soon. Alright, so guys, type in number 1 if you can hear me properly and my screen is good enough, is clear enough for you to see a few things I'm about to show you before we get started with the interview. Right, Eddie, Jackie, Eric, Ozzy, welcome guys, thanks for coming in. And a few more people will be coming in, just have to get through a certain handful of issues they got going on. It's still pretty early in some places, so alright, before we get to the interview, I'm going to show you a few key things that I've been studying for the last couple of days. Okay, and this dip on Bitcoin and the crash in the markets kind of filled entire single stream of buy zones that I had posted in the Telegram group. Okay, some did go a little bit lower, but overall we got the exact buy zones we were hoping for and waiting for using technical analysis. Alright, so guys, if you're not in it yet, do join the Telegram group. Link is in the description below. Click on it, come back. The community is great. We keep it small, we keep it simple, we keep it accurate, and you will love it. Alright, so from my previous streams, you all know that I've been working on a fractal from 2018 on Bitcoin, right? Okay, and this is the fractal that has played out. This is the exact fractal pulled from 2018, okay, right before Bitcoin went into its retracement, right? Yo, Jungle Boy, you finally here. Thanks, man. Thanks for coming. Alright, so this fractal played out to completion. Alright, dipped a little bit below than it should have, but hey, still, it's on a wick, which means it's buying pressure. I love this candle, which I call a bullish pin bar, and I love the fact that it has been printed now on Bitcoin. Okay, it does that every single time Bitcoin is about to bounce. Okay, and it's good news. It is good news. Now, I have a theory on Bitcoin, and I have found the extension to the fractal that I showed you guys previously. Okay, and it's this fractal right here. It is the extension from 2018 signaling the retracement to the upside to Bitcoin. Alright, and marking the bottom, let's just say it did bottom here, it still sticks to my target of $54,000. Okay, and I've said 55 to 60, but hey, listen, 54 on a fractal, on a theory basis, is still pretty great, right? Let's pull the Fibonacci's and see where we end up. Look at that, exactly at the 618 fib level. Okay, we sit exactly at the 618 fib level, so that is confluence, and is a good confluence in my book. Alright, I will show you a few of the key aspects on the technicals on the TradingView chart, but I have to show this to you because I get more price action on CoinTrader Pro. Alright, so this signals a retracement to the upside, right? Let's get rid of this for a minute, and I will take a look at this fractal, which is the fractal from this upside retracement that we had in May, June, and July accumulation, and then it went on to bounce. Alright, so if I take whichever fractal I take, they all point to the upside between 55 and 60k. Okay, we can see this fractal right here marks to about 58k, 59k level, and that's the 786 fib level. Okay, now the fractal is kind of playing out almost the same. Okay, almost the same, double bottom, but one with a higher low. Okay, so that's what we got. Now the only thing remaining to see is if it's going to play us a chop in the coming weeks, or it's just about ready to go to the upside. And what will the altcoin market do during this period? Alright, but before we get to that, Bitcoin is looking good. Alright, Bitcoin is looking good. Now, a few key things that I want you to keep in mind with this whole thing that's going on in the world. Look at the geopolitical issues. Some things have been not really clear. Okay, that's why I asked people in the trading room to hold off on the buys before Bitcoin dropped from 38 all the way down to 34. Okay, now we had the dollar index. look at what the dollar index did. It went up, okay, but at the same time, gold went up. Now usually what happens is you got one or you got the other. Okay, so if the dollar goes up, it hurts gold and it hurts the markets, right? No matter if it's crypto, if it's just stock market, it hurts every single thing. If the dollar goes up, it has a global effect on the economy of trading, right? And gold is practically trading as well. Now, it's curious to see how both of them they went up because of this geopolitical issue, right? Now, you can see right here, I have a purple box and I was expecting a rejection at this point. Now, I don't know, looking at the price action, I just assumed there was going to be a rejection. But when I took a look at the Fibonacci's, 702, 786, in between that range, it got the fib level from key aspects, from key resistance zones, okay? So these two purple boxes, they mark the resistance zone, and there we got a huge sell-off. So practically what gold did yesterday, it ran up about 3.3%, and then it lost the entire thing, actually more, it lost 5% of its value. Okay, just gave it all back. So I went back to the previous gold chart, previous time it broke out from after consolidation, and I pulled this fractal. And look how well that fits. Okay, so that's why I was kind of bearish on thinking that gold is going to break into the all-time highs anytime soon. Okay, simply because the price action looked incomplete. Not that it's looking bearish, it's just looking incomplete for me to be extremely bullish onto new all-time highs. Okay, and that would be awful, absolutely awful for the markets. Now, looked at the SP 500. Now, you've all known me from the drawings, and you all know what I do. I pointed out a clear-cut rounded top that the SP 500 was making. Okay, and pretty soon there was going to be a rejection. Now, what I expect now from SP 500 is a bounce. Okay, I was expecting it to bounce here, but right now I'm pretty sure there should be a bullish divergence printing. See, there is already bullish divergence on the RSI. The histogram is about to print it with a small red hill, and the price action is actually lower than the previous low, so that means a bounce. But don't be fooled, I'm not saying it's just going to blast into new all-time highs. I do think we're going to play out this structure right here, a double bottom. Okay, and this could take about a week, maybe even a month. Okay, but the longer it consolidates, the stronger it holds, and the stronger chance we go on to do a bearish retest of this zone of 47,000 points. Okay, now this will be an extremely critical level to watch for. I think the SP 500 is almost hit its top. We are making lower highs right now, and if this lower high is confirmed, that means it's starting a bearish trend. So I would definitely get out of the stock market at that point. Okay, but until then, yo CP, all good man, all good on my end. How are you? Alright, so I have a gift for you for people who trade stocks. I stumbled upon Facebook. Okay, now to me it looks solid, and by solid I mean strong. Why? We have bullish engulfing candle on the daily. It has lost a huge chunk of its value. It's bouncing off, as you all know, my 0.886 fib level, and to me that is pretty strong. So I think it's going to go up and fill the gap at about 290, 289, 290. You know, besides that's what these assets, they always do. When they have a huge crash like that, they always go up. So 40% on a stock trade in the coming month is not a bad idea. Right? It's a stock, 40% on a stock. Man, in a short-term trade, because it's a month, maybe two, that's huge. I mean, that's the amount you wait for crypto, at least, or maybe about 2 weeks. And crypto moves 10 times faster in the speed of light than stock does. Right? So it makes sense. Now, PayPal. Look at PayPal, it's doing the same thing. It's a huge retracement, guys. Huge retracement. I mean, take a look at the percentages. All-time highs. 69% of its value is done, is gone. And that's what usually happens. At this point, when a crypto asset loses 70% of its value, it bounces. I'm not saying it's going to go up and make new all-time highs. You just find an entry pretty soon right here on PayPal, but anything between 100 and 115, and you let it go for another 40%. Right? If you remember my calls on Telegram, before Bitcoin dropped all the way to 35, I did post 40 to 70% trades, and it was all based on this theory of the bounce, because that's what they always do. Looking at the price action, they need more price action for an asset to give you a direction. It will need to give you print more price action, and right now the price action that is lacking is to the upside. Okay, and it's a daily chart as well. This is a bullish pin bar, bullish engulfing candle, whatever you want to call it. It's looking good, and it's not too late for an entry either. So maybe about a 105 to 115, I would ladder multiple buys in here, and I would let it go for 40%. Okay, just until it fills its gap. Maybe about 150, 160 mark, and then we see what to do. Okay. So watch for these two trades. I think they can make you gains. All right, it's looking pretty solid. Now, yesterday, if you all recall, I did mention that we were kind of in the midst of maybe a game that the market makers are playing, right? And it just might be a distraction. Now take a look at this. This is from one of the experts I follow. I actually came onto this today. ABC correction, right? It's completed its ABC correction, and the bearish news came out right here when people started to panic sell and go into the dollar, and that's why the dollar bounced. So did the gold, right? But honestly, the chart was so incomplete, and it wasn't ready for me to believe that, okay, the gold is going to break it to an all-time highs and we're going full-on war in Europe, right? So it just sounded a bit off. So now what I am expecting is a pullback. But what sort of a pullback? It's not that it's going to come down. No, this is an extremely great candle right here, a bullish pin bar. You let it go up, you let it bounce, let it find the support, and then let it go up. Okay, that's what we do, and this is where we find all the trades that we need. Okay, but I'm not so bullish on the stock market. It's just something that I came across. Now, one thing that I want you to look at is this. Okay, look at this fractal right here. I'm gonna open the dollar fractal. It just doesn't have too much data on it yet. But look, this fractal is from Bitcoin. No, not that one. Hold up. Now they don't really give me the data yet, so I'm gonna have to find another way. DXY, finance, dollar, Ethereum, no, nothing. Basically what I wanted to show you on that is dollar, the fact that it went up. Actually, hold on, I might be able to do it here. 1 second. Let me go all the way back to 2018, see if I can find that data for you. Alright, here we go. I'm going to take this entire fractal and I'm going to post it onto the DXY. And that is why I'm curious and I'm still bullish on the fact that Bitcoin has a little bit of leg left up to go into the upside. Okay, see? To me, this is no coincidence that everything kind of works out in the same manner. Okay, and that's why I'm bullish on Bitcoin, because it's kind of pointing to the same things. Okay, and look, this is what the dollar did. Okay, this is what the dollar did. It found its bottom and then eventually went back to pull up to the upside. Alright, so that's what I'm expecting on Bitcoin. Just, we have to be patient, and the time will tell how long it will take because of Bitcoin dominance and the USDT dominance. But the fact is, the dollar is currently making a bearish harmonic. Okay, and that is a bearish pattern, which means it breaks to the downside. Not only that, we have a rising wedge, which also typically breaks to the downside. Okay, so that's one. Now we got the USDT dominance, and it's playing out the fractal as well. Now we got a clear-cut double top, which means people are actually interested in buying the assets, right? So we got that thing going for us too. And I do like what I see on the USDT dominance. Okay, this fractal sort of is, because nothing is exact, but hey, I do my best. Try to kind of make it fit, because I can't force it either, so just have to kind of go with the plays. Right, now it is looking bearish, it is still following. Okay, so here's what I've planned, right? I drew this for you right here, and I did say it was going to make a bearish divergence, right? And now it's currently sitting there with a double top, but the RSI is pointing onto a bearish divergence, so that is good news. That is extremely good news. Okay, had a bounce, did a bearish retest of a critical level right here, and now it's breaking down with a double top. So confluences all around, and this for me is good. And of course we can't forget the stochastics, which are also drawn, and it should come down sometime soon. All right, it did hit about 5%, which was the target. 5.20, 5.50, that was my targets. Actually 5.25, but hey, it's good. It's really good. All right, so we're looking good on all time frames, especially with all these dominances that have been killing our trades, or actually they had the aim of killing our trades, but we were well aware of it. Now when I look at these things, to me this means in the next couple of weeks there's gonna be a great accumulation, or it's just everything's just gonna start going up. Now personally, I'm not a big fan of waiting for these things to break down and the prices to start going up so I can start buying. Alright, I do post a lot of calls for the things that I am personally bullish on, and that was mainly because of the charts, of what I see, and why I go for the coins, because they're still ahead of some other projects that still need maybe a month or two, just like OMG and Tezos, and that's why I really like them. And as soon as this thing breaks down and does a bearish retest, that is when I complete my positions. Okay, that is when I start completing my positions, because this bearish retest is going to be a confirmation that there is no further upsides, not even a chance for a fake out. And right now it is looking a bit bearish because it just doesn't have the strength to keep pushing up. To me that looks good. Besides, it's kind of a rising wedge as well. Okay, so I do hope this thing breaks down. It's a double top bearish divergence all around, and it's looking good to me for a breakdown. But sometimes Bitcoin has a lot of tricks up his sleeve, which means it can ruin our trades, right? So we're just waiting, but you know the plan, right? You know the coins, you know why those coins are good, and I'm still expecting some sort of a miracle right here to happen, and kind of been working with this theory, trying to make this fractal fit somehow, extending. I just haven't gotten to a place how to do it, right? But I do think it can fit sometime. Need to figure it out. Maybe it's another fractal, maybe it's the combination of ETH and BTC dominance that goes. Okay, one other thing, and that's also one of the reasons why I was thinking that Bitcoin might drop, is because of this chart, the shorts. Okay, you can see I already have the work there. I was expecting a little bit of a breakout because it just refused to come down, but need to be sure if it's a fake out or it's a confirmed breakout. All right, it does look like it's tired at this very moment. Okay, it needs to accumulate a little bit more before it starts to go up. Now it's too damn high. The move has already been made. Let's see the longs. Longs can tell us a bit more story. Yeah, the longs are starting to go up. The longs are definitely starting to go up. And this is good as well. But looking at the chart, either this is gonna range or it's just gonna fly. Okay, so good news for us is we found the bottom. We know the key aspects that are going on with the dominances, and we are getting ready to buy. Okay, and that's our plan. Right, so let's go through some of the coins that have been previously called on the channels. Okay, we're still going to play this trade. Okay, as soon as I find a signal of a double bottom, okay, I'm going to take this trade. Now, I will tell you something. I'm not personally a big fan of buying the wicks right here. Okay, I'm not. For me, it's always the double bottom or a higher low or a confirmation low. That's what I do, right? So that sort of a thing I'm waiting for, and then go to the upside. All right, that is what I'm waiting for. And this here, in this purple zone right here, this is where I will take the trade. I don't care for a second I don't get the best price. I really don't. Why? Because to me that is security. To me that is security, not only that the trade will go well, but I have a confirmation that the market is not going to turn upside down and go against me. Okay, so that is why I always want to take a better entry. For me, a secure entry, to be precise. All right, now this is a lower low. One other thing, why the reason why I'm not taking this trade right now is this is a lower low in comparison to that one, the previous one. Okay, there should be a bullish divergence printing at this very moment as we speak right here, but it isn't confirmed. Okay, it is not confirmed. Now, the reason why I'm keeping an eye on this thing is because of the RSI. It's just simple. It's beautiful. It's still sitting in a falling channel. Every single time it drops to this range, it wants to bounce. Okay, it's a consecutive sections of higher lows and in a falling wedge right now. So to me, that looks good. I just need one more higher low on a confirmation. This will be printed for me on, see what I can see right here. If I remove the fractal, it's a double bottom, okay, with a bullish pin bar. So that's clear. Now I go into the 12-hour time frame and I wait for this to break out higher, okay, just as I drew here. So breaking this higher, taking out this high, and then coming back down to retest is going to be my entry. It's a confirmation that is going to be a higher low and a higher high both at the same time, and I can get in my trade and I can follow this fractal which was previously posted and expected, which is why I held tough to my buy zones of 3.5 to 4.5. Okay, now it did go almost 10% below the entries, but that was the stop loss was to be put after it dropped after you've completed your buys on average. Okay, and even then your 10% stop loss wasn't hit. Okay, so that sort of calculations is what I do. And now that we have a guest right here, he is one of the guys who is kind of a master in nailing the bottoms. Okay, so that's why I have him on here, and I am going to make him the host so he can show you what he does, how he does, and give us some much needed insight and how he handles his psychology in the market, how he holds the trades, and he's strong enough, tough enough, and basically we will know how not to panic. Okay, so Yodas, welcome. Can you hear me okay?
Hello everyone, I hope you can listen to me. Is the sound okay?
Yeah, the sound is okay, but let me just ask the audience, see if the sound is okay for them. If not, I will just readjust my mic just a little bit more. Alright guys, type in number 1 if you can hear Yoda.
1, 2, test.
I know, right?
Alright,
Yeah, take the floor, man. Take the floor, all yours.
okay, so let's discuss a little bit about Bitcoin and how basically where we are, what I see on the charts, and how we can, let's say, find possible entries in the future. One thing that I want to tell you is that I'm always interesting in the market structure. And the market structure is currently, as you can always see, it's quite bearish in my opinion. We still haven't gotten, basically above these points here. For example, this high here for me is very, very important to be taken. So the first high is here, right? And we obviously have these lows here, and then we have a structure here. So these lines mainly are the floor and the top for Bitcoin right now. What is interesting to see on the chart is, like, if you, for example, the volume profile from the start, you will see that we are approaching the global, for example, point of control, right? Which is around, $47,000, which is another, ceiling to us in terms of where we can go from here, right? And then for the lows, you have here the value area low, okay, at 31,058, which should give a significant, for example, bottom. So this is on the monthly chart. If you go, for example, to the structure is more or less the same, right? We have this, for example, key area of resistance here, which we have to take over, right? This line here, this zone, basically treat this like a zone, $200 up, $200 down does make a difference. And you can see here also that you have gaps in the volume, and price tends either to fill those gaps, or as long is inside those gaps, it tends to move quickly. So if you see, for example, this gap here, all right, on the weekly volume chart, you can basically see that, you know, price impulsed, stopped at the gap, found resistance at the gap, stopped at the gap, found resistance of the gap, resistance. And basically this gap here in the volume marks one of the most critical areas, in my opinion, for Bitcoin. Because here you have the top of the summer range, for example. Here we have the top of the summer range, which was also resistance in January, all right, which was support then on September. We didn't test it here. We tried to test it here, all right, it held for a day, 2-3 days if I remember correctly, and then you had this impulse move to the downside, and as you had the impulse move to the downside, you also had the impulse move to the upside. It's basically simple mathematics. What goes down goes up the same way. And then where we found resistance again here on this weekly resistance point. And right now, this is one, as you know, one of the most bearish candles that you can have on a weekly, right? In my opinion, the Ukrainian situation was just a catalyst yesterday. We were going to drop, right? I think it would take a little bit more time, but we were going to drop. It's very, very obvious, right? And at the moment, you know, we are trying to get back to this resistance. I think that we might see something like, for example, like this. So it goes up, it takes it, consolidates, fakes out, backtest, and then drop down, right? This is the first scenario, of course, and the other scenario is that you take this up, you start building support, and then you move to the next resistance here, all right? And somewhere around here is also, if I remember correctly, the yearly open around here. So if you take the yearly open as support, then we can discuss for $50,000 probably. If you do not take yearly open as support because you haven't backtested it yet as a resistance, and you hit it and you drop from there, then I see probably $32,000 in my opinion. I think that we have this weekly demand zone here, all right? We already tested it with a week, twice, all right? And for me, this is the area where Bitcoin is either going to bottom or it's going to, you know, drop massively. I always also like to think what will hurt the most participants in the market, all right? So you have already seen, you know, a move from the lows to the highs, then back to the lows, then back to the highs, and probably something like this. So you can create, for example, an M pattern, all right? This can still be this can still be a low, a higher low to this, all right? So at the moment, what we have people that start to get bullish here. We have people that are saying on Twitter that, you know, the Ukrainian situation is over. This was a golden opportunity, you know, for everyone to buy. So we put a higher low here, and now we're waiting. We put a lower high here, and now we're waiting what? We're waiting for the higher low. Okay, obviously. And for me, this is a very, very dangerous area. So if you, for example, long here, even here, you know, even today, you had the opportunity to long for, you know, a 2, 3, 5% move. I think we are approaching an area which is major resistance, and I can show you what I mean in terms of volume and how this thing is structured when we will look, for example, the TPO chart. So this chart you probably are not very familiar with. If you are, then it will be very easy to follow the steps. So this chart is basically a time price opportunity chart, right? Two things are interesting here for us. The first thing is that we calculate the time that a move or a range plays out, or how long price is sitting in the levels that we want for how much time. And the next thing that we are examining is volume. The correlation between volume and time is very important, because time and volume usually have two separate identities. They can also be correlated and they can also be equal, but usually they have two separate identities. What do I mean is that you can see, for example, if we zoom in, right, and so this is your volume point of control, all right, which sits around 35,625, and this is your time point of control. So price spent more time here, but the biggest volume in the range was traded here. Okay, time here, volume here, and this is basically your value area of yesterday. So what price wants to do, or what price likes to do, is price always wants to move in a balance, all right? So here we have the value area, which is the balance of yesterday, all right? And here you have the value area of today. What we can do with TPO is actually merge sessions, so we can see how the volume and the time, right, actually develops. So here we have one impulse, the second impulse, and in between we have a range, all right? And it's very interesting to see in that range that, you know, you spend a lot more time, right, at the top of the range, and you traded most of your volume at the middle part of the range, at the bottom part of the range, right? And as you can see here, if you start looking closer, you see that this whole area, right, this whole area, up to this value area low, is filled, you know, with shorts, right? It's filled with shorts, it's filled with shorts, all right? So what price did yesterday, all right, was a move to the upper part of this range, all right, in order to take the shorts out. The shorts were too much. The ratio of the range was very big, all right, and the ratio of the range was very big in terms of, you know, the shorts and the longs. And the market maker always wants to put the range in a balance. So if you see, for example, that massive shorts are opening to a level, but price does not drop, instead it moves higher, that is a key signal for you that says that the market maker is trying to capture these shorts in order to reverse the price action. The market works as in a very simple way. You want to long, you need to liquidate the shorts. You want to short, you need to liquidate the longs. All that is happening every day in the day trading time frames, like, 4 hours, 1 hour, 30 minutes, all you have to do is take the trades that are favorite to the sentiment of the price. And what do I mean by the sentiment of the price? We will move to another chart right now, which has the sessions of the day. Okay? So basically here we have the 4 sessions of the day. So here is the close session, which is between the 2 sessions. Here we have the Asia session, New York session, London session, and New York session, where we are now. Okay, so let's look a little bit at the back. So here we found our local bottom, right, yesterday. All right, we found the bottom during Asia. Then we had New York, which opened below the point of control of Asia, but traded above and formed a new high. All right. Then New York came, all right, it opened below the point of control of Asia, and then it pushed higher. It rejected here, but the value area low of this session, okay? So if you see the value area low here, price reached there, boom, dropped, and then went back. And what happened afterwards was that here, New York opened below the point of control of the close session, and instantly it pushed the price up to liquidate all the shorts, as we discussed. So this was a stop hunt, as we say. All right? Market makers saw that there were too many shorts in that range, and they had to take them out. So it took them out, and now it's ranging, rebalancing the order books, all right, forming essentially a new balance area for us to trade. Okay? And let's see right now what imbalances we have above us in order to fill. So here you can see we have a selling tail, which if you go to your charts, for example, if we, let's expand it a little bit, okay? So this is the wick that we put today, all right, which was the high, and we got ultimately rejected, and we formed this selling tail. This selling tail has liquidity, all right? So this selling tail is getting pushed right now. If you see here, for example, we are raging in the selling tail, all right, trying to fill it. Once we fill it, 2 things will happen, right? Either we will move, either we will do something like this in order to take this point of control and then continue up, okay? Or we will find a way, fill the single prints and then move up, all right? So once this range gets filled, market maker has no other job left for him to do here, and he can move the price higher. Where can he go? Where is the next balance that he wants to get in? The next balance that he wants to get in is here. And this balance area, my friends, starts from 41,600 to 44,137. Are we going to go there immediately? No, it doesn't make any sense. What do we have to do in order to get there? First of all, we need to fill the single prints. Right? These are imbalances as price moves down or up. When you get high speed moves, all right, it leaves these traces behind. So price has no structure here. Okay? When price touches these areas for the first time, it does something like this. All right, and it reverses. When price gets acceptance to these areas, it moves very, very, very fast. Okay? Unfortunately, just above the single prints here, we also have the value area low of the impulse camp. And the value area low is a very, very strong point of resistance, because if you claim value area low and you start doing something like this, all right, then you essentially, all right, getting in this balance area. And based on market law dynamics, when you get acceptance to an old balance, you can move from the bottom of the balance to the top. However, we have two key areas, two key levels that we need to see and be careful about. The first area is this one, which is the naked volume point of control. And when I say naked volume point of control, it's a point of control of a range that hasn't been tested. And all these things, naked volume point of control and naked time point of control, when they get tested for the first time, all right, usually they give very, very big reactions. So either this or this, either the volume or the time point of control can give, you know, a very, very massive reaction, and we can see prices, you know, we can do something like this, for example, and then drop back, test this naked point of control as support, and then continue up. So one way or another, this naked point of control, in my opinion, and this naked point of control mark our new trading range for the next days. All right, we do not know where the price will go first, but we have a plan that says, if the price moves to this area, I have my levels ready, I know where to short, I know where my stop loss is, I know where to long, I know where my stop loss is. So I have a scenario that takes me either here, I have a scenario that takes me here. There is no one way in trading. So the question that is usually asked by everyone is, are we going to go up? No, this is not the question. You shouldn't be cared if you're going to go up or if you're going to go down. What you should care about is that if you go up, you know where your levels are, and if you go down, you know where your levels are, and you have a plan, all right, that shows what you should do if you hit those levels, and what you should do if you hit the upper levels, or what you should do if you hit the lower levels, all right? And by this, I mean that there shouldn't be a discussion on your mind, there shouldn't be a question mark on your mind regarding where price will go. You are a trader and you are not a hodler. If you are a hodler, yes, you care that the price should always go up because you hold coins and you want those coins, you know, to gain value. You want those coins to, let's say, watch something that you bought at $1 go to $5, go to $10, go out to $20. This will not happen, you know, in a day. I think that most of the people have already seen that, and most of the people already know that. But you want the price to move in your direction. While in trading, all you want to do is to have a plan. And you need to have a plan, and you need, you know, to trade this plan. And the more you trade this plan, the more you become profitable. And another thing that I wanted to show you is here we have a platform called, for example, HighBlock. And we can see here we can see here right now, where is it? So it's here, okay. Let it load a bit. It's a little bit slow. So what we are going to see here is the liquidation levels of the positions that are currently in the market in our range. And the knowledge that you gain from these levels is that whenever you see a level that is, for example, here you can see that in this range right now that we are trading, for example, from 41K to 34, 33K, we have in this range 20 more billion longs, all right? And look how less the shorts are in this range right now. So one has to wonder, where is the market maker wants to move the price in order to balance this range? I would say that it's very, very probable that the market maker will clear some of the liquidity here, for example, right? Will clear some of the liquidity here, around 40K, all right? And then, as you can see here, you have two colors, for example. You have the yellow color and you have the red color. The more the line is stretched to the right side, the more big the position is. Red color is the 50x longs. Yellow color is the 100x longs, okay? So what can you expect from the market maker, for example? Market maker already took all these shorts yesterday, right? All these shorts that were building here for at least a week, they got wrecked yesterday, all right? So yesterday we had like more than 20 billion in shorts, and today we have 20 billion in longs. You see that? We went from almost 20 billion in shorts. We went in one day to 20 billion longs. Essentially, this is what I was telling you before, that market maker always likes to balance the range. So when he sees that the shorts are getting, overheated, he liquidates them, rebalance, and you can long. Right now you are in an area where the longs are getting overheated, so we can expect pretty soon a rebalance of the range. Where will this range go? Where will this balance go? So if we zoom in, for example, to those levels, or let's say that we look at the bigger positions, and we always use Binance because Binance has the most volume on the USDT pair than any other exchange. So the first key area that we will be looking is obviously for the market maker to take out these 100x longs. And these 100x longs usually, when they are big enough, so here, for example, you have, let's check, right. Look where the price found the bottom yesterday. So here you had, a position that was 50 million. It liquidated all those people, and essentially it stopped here, all right? In this short liquidation, this was a 100 short liquidation of 56 million. So price moved here, liquidated everyone, and finally liquidated this guy. This guy got exchanged with this long of 50 million, You can see that 55.9, and then another guy opened a long here of about 45 million. So this position was exchanged, and we found, you know, the support, and we reversed. Where do we think that the price can go right now? Well, it's pretty obvious that at $30,320, for example, it is a good area where we will start to look for confluences on our chart to see where if we have enough confluences there for the price to stop. And if this happens and price goes and liquidates, you know, all these positions, then we are confident to watch for a trade here. And if this doesn't happen and market maker wants to, you know, go lower, then you have this very, very nice area here where you have a 50x long position of about 50 million and another 25x position of about, you know, 82 million. So based on this, what we want to see is market makers start moving down. These positions, as you come down, will start closing, and they will be becoming, you know, short positions. Once those positions go and find the level of support, like, you know, it's either previous day value area low or a previous day point of control, which is, you know, around these areas, then you have enough confluences to say that if they manage to liquidate this guy, then this drop has, you know, now enough liquidity to reverse the order books and pump, you know, to liquidate the late shorts. Because if you go, for example, to previous days and see the chart and see how the price behaved all these days, it is nothing more than a brutal, really, really brutal stop coming. Okay, so you see that here you had, for example, all right, very, very big longs, 185 million longs, all right. What did price do? It went down, it hit those longs, all right, it took them out, pumped a bit, and then came down to kill all these 100x longs that opened on the retracts, all right? All these 100x longs got wrecked, okay? So price found enough liquidity to reverse. And this is something that you need high block in order to find intraday levels. In order, if you are day trading, and you are day trading, for example, based on volume, if you are day trading based on, you know, positions open versus position closed, and you are monitoring these things, then you absolutely need this tool, because it is very, very crucial to your analysis. And we can go back for a little bit to exo charts to look at the footprint charts. I will show you some. Things. So if we go here, let's say, for example, we can go to this chart, which is a footprint chart. This basically shows us on every candle the volume, the delta, if it's positive, if it's negative, all right? The delta is the calculation between the bid ask. So you have sells and you have buys, and this is the difference. So if it's green, it's positive. If it's red, it's negative, all right? And you can clearly see here, for example, let's go to yesterday, when we found our bottom, all right? So let's start by looking how the drop started. So you were consolidating here, for example, and you were forming a range, right? And here, let me close this so it doesn't bother you. So here you had, for example, you were at previous month value area high, all right? It was 39,140, okay? and you were consolidating here until you made the push to hit that level and take it out, okay? The moment that you made the push, all right, you made the push while you had longs opening at the top of the candle. You didn't have very much imbalances, right? That means that the longs were covered by the shorts. And once you hit that level, all right, you deviated a little bit above, and then you started to drop. And as you were dropping, you can see clearly here, all right, that despite the fact that you pushed on the level on this candle, all right, you went from 10 million positive delta, then you have 12 million positive delta, and then on the breakout candle, you have $200,000 only positive delta. That shows you that here you had absorption, which means that the market maker here was building shorts. They were selling spot, all right, which was absorbing the longs on the perpetuals, okay? And once the longs got absorbed here, all right, and you can see clearly here that you have a range, for example. So look at the longs that opened here, and then they pushed the price up. You had 160 million on that candle, all right, with 34 million positive delta. You push the price up, you reclaim the level, and then you will start raging. The moment, and this is very crucial, guys, to understand, the moment that you are below this level, where you have the imbalances, all right, and all the longs here, all right, the moment that you are below this level, all the longs here are trapped, okay? All the longs here are trapped. So what do you think these people are going to do? What do you think they are going to do? Let's see the open interest, for example, right? Let's see the open interest. So you pushed up, you start to rise in open interest, right? And then you start dropping with open interest closed. See that? If you see, for example, the net longs, the longs were opening here on the rise up, and once you lost that level, the longs started to close, and they were closing, all the way down, all right? And if we enable also this, you will see that these bubbles here are longs that are starting to get liquidated. So liquidations. What does it tell us? It tells us that when you're pushing to a level, all right, and you have the volume concentrated at the top of the candle, and the price cannot push up, and the open interest start dropping, then you know that this level is probably not going to hold, and it will probably shrink failure pattern this, which means that you go up, you take the liquidity, 4 more longs come in, you get absorbed, and then you get your move down. And we got our move down, all right? Basically, if you can see this, all right? This also, so we had this candle here that trapped the longs, and this candle here, that was the anchor that created the move, okay? So you see this was the last low, which created the move, okay? And the moment that you drop below this low on this candle, all right? Look how many shorts opened here. Millions and millions of shorts started to open here, right? In order to clear the range, all right? And the range was cleared. And the range was cleared until we found, until we found support, and we started to do the same thing. What did we do? We start to absorbing the shorts here, all right? If you can see, for example, on this panel, all right, you went down, you had massive negative delta, and suddenly you start to see positive delta, all right, positive delta. What do? You create a stop here, the first low, all right, price moves up, and then it comes down, take out these stops, all right, finds support, and then moves up. This is a classic day trading pattern of Bitcoin. What it wants to do, it wants to kill all the early longs. So here you have all these longs opening. You can see in these two candles, all right? 7.5 positive delta, 10 million positive delta here. What price does, it wants this liquidity, all right, in order to kill the late shorts. So it reverses here the books, takes out the early longs, all right, hits the stop losses, and then you can move up, all right? And basically here, as you can see today, we had this lovely wick over here, all right? Why did we drop? Why did we not continue? Well, it is very obvious, my friend, because on the top of the wick, as you can see, you have imbalances in longs. These are all FOMO longs that are longing, you know, the impulse candle to the top, okay? With 65 million in positive delta and massive volume, 856 million this candle. And with 856 million, this candle would not, you know, break the previous levels that we had. So it went to the previous weak point of control, which was around here. It didn't even touch it. And this level gave the resistance, you know, and it cleared the longs. And as you can see, from 65 million positive delta, which was a huge candle, on the next candle you had, you know, 5.3 million negative delta, which dropped the price down. And it continued, you know, to range. So where do we are now? Now, as you can see, we formed a series, you know, of higher lows, like lower highs, higher lows, etc. So the price action is moving, and the price action wants to go and retest and retake this liquidity. It is all a matter of, you know, strength and balance of the positions, if this liquidity is going to be taken or not. And what I mean by that is that, as you can see here, the candles that tried to push, all right, the longs were again on the top, here and here. So right now, what do we have? If we lose this low, for example, okay, if you see this low, for example, taken, okay, and you lose previous week, for example, value area low, then you can start to see lower prices. And by lower prices, I mean that you have levels, of course, you have levels on the downside, which are support. I would be looking around this area to bid for my longs, again, around, you know, 36,200, 35,000, also good support in terms of liquidity areas, because, you know, you have a lot of liquidations here. If the price comes down, these people here certainly will defend their positions. So this might be also a move from the market maker to capture, you know, the last shorts in this range in order to gain fuel and reverse the size with a sizable position and sizable, you know, volume, and push again this range high in order to break it. All that you need to know is your level, for example, previous day value area high. And as you come to this level, you need to monitor, you know, order flow and see if you have, you know, massive shorts open at the bottom with massive volume, then you will probably not going to break this level, because these late positions are going to get absorbed by the market makers, all right? And the problem that you have is that when you reach this level and you do not have order flow, you are blind, all right? So you basically are bidding on a level without knowing, all right, how how the level is going to react in terms of volume and in terms of exchange of liquidity. And by this, and by using also order block, you can be entering into the trades with the probabilities on your side. And if the probabilities are on your side, then, and you have your plan ready, as we said, that if this level is going to get hit, I want to see the reaction. If the reaction is given, then I'm going to enter the trade. I will not reset. I will not go to sleep with my limits waiting. I want to see the reaction of the level. If you trade based on the reaction, then this is how you are going to nail the tops. This is how you're going to nail the bottoms. And this is how you can take, for example, the high probabilities trades. So I think that was enough for today. Probably for many of you, a whole new world. And I think we can do more streams in the future discussing order flow and how you can trade with it and how you can find better entries with it. Right?
Yeah, man, sounds great. Honestly, this is a bit too technical, but it's great info, man. It's great info.
It is very technical, but I believe it has to do a lot with the psychology of the market and how you can eliminate, for example, the bias that, oh, the price is going to go down, oh, the price is going to go up, oh, you know, Ukraine is getting invaded, we are going to $20,000. Until, you know, you see on those charts that, you know, this is possible, that this is happening, that this is, you know, a probability that you can trade off. Until that point where the chart will show you this, in my opinion, you have no trade. In my opinion, everything else is like, you know, oh, Twitter says we're going to 20K, oh, you know, this YouTuber said we are going to 100K, and so on. Just my 2 cents. I wouldn't bet, you know, my dollars either on the news or, you know, on the analysis that is, you know, so macro that says that, you know, by the end of the year, you know, Bitcoin is going to be 100K. So, yeah, so if Bitcoin by the end of the year is going to be 100K, then let's say that, you know, buy everything now, you know, you are at $38,000. What can go wrong, you know, right? We are going to 100K. So, and what happens if before, you know, 100K, we go to 25K, for example, 90K, I do not know, you know? What happens then? Are you going to hold those coins from, you know, $40,000 to 25K because you still hope that we will go by the end of the year, you know, to $100,000? Yes, it's a probability, and I think a lot of people will do it. I'm not comfortable to do that.
No, most people don't understand the fact that, you know, it takes a lot in crypto. And when it takes a lot, you have to protect your capital because you can buy double, triple the amount when it goes down. And honestly, I understand all these aspects, but I'm always been sort of like the price action guy. So I can look at the price action and I say, okay, 4 things are pointing down. I'll wait for it to point down. But this is actually a bit more clearer idea as to how you should nail the bottom.
You know, all the bottoms have, if you day trade them, because in order, you know, to find the bottom and trade it, you need to, let's say, know of the different scenarios that can form bottoms. Okay, so for example, there are no single bottoms. All right, there are no single bottoms. Price will always come down, you know, and take the stops and reverses. Okay, it will put the first low, then at some point it will put a lower low. This second lower low has to be followed, for example, by a higher low on a high time frame. All right, on a high time frame. If you are trading, for example, high time frames, okay, look at the July, for example, range. Let's go back to July so I can show you what I mean. Let me change the screen. Okay, so let's clear this. So let's go here, okay? Now let's go to a daily chart. You see the screen? You see, right?
Yeah.
So you had your first low here, right? So here is, what do we mean by low? We mean that here you have the stops, okay? Here are the stops. You remember the stops that I showed you on the footprint chart?
Yeah.
Right, so here you have all those people, right? That long comfortably, right? Comfortably. They are here, you know, they are here. And they are here knowing that this is the bottom, okay? And they can go, you know, 50, 60, 70, 80, 90, $100,000, okay? And what price did? Price did. Came down, took those stops, right? So it put a lower low here. So here you had your low, okay? And here you had, for example, your lower low, okay? And here you had your first higher low.
Yeah, the lower low is what I call capitulation.
Yeah. You're right. I'm not saying that you're wrong. All right. Here you have a higher low. And Bitcoin is so brutal, all right, that even when you got the low, and you got the lower low, and you were expecting, you know, a higher low to get long, all right, we were expecting a higher low to get long. What Bitcoin did, it came back and took the stops, you know, even from these lows, right? It took the stops even from these lows, right? And then it bounced. The same thing happened here, you know, for all these guys, you know. They shorted here, people who shorted here remained in the short until here, you know. And they got taken out, you know, 20th of May, July, almost, you know, 3-4 months after. Right? You had these stops taken. You see that? People who shorted there got stopped out months after this. Months. They had all the time in the world, you know, to take profits, compound, put more shorts, open longs, etc., etc., etc. And the same thing, look at this thing, okay? So you had your low and you had, the same thing happened here. You remember this, right?
Yeah.
We put the low, right? Everyone was bullish here, everyone. This is the bottom, it's not going, you know, below this. This is the bottom. Everyone was bullish. And what it did was, all right, if you see this iceberg here, all right, see this? So this is, you have one, you take this out, you have two, you take this out, you consolidate a bit, and then you have your impulse up, okay? At this point, you know that this is a key level. Why? Because this high that you put here, all right, created this consolidation before the last impulse hit. Okay? How could you short here? Basically, in my opinion, it was, for example, an easy short, right? It was basically the same short that you had here, for example, right? Basically the same short. Okay? Where is the next short of this magnitude, possibly, if this is the low? It's here, as you say, 55,000. All right? 55. So this is the area where we will get either something like this or something like this. Okay? And this, if you remember, it was a 25% drop. And this, if you remember, it was, let's take it to the first week only, a 51% drop. So if you drop, for example, from here, let's put it somewhere in the middle, for example, right? You drop 55%, where do you go? You go to 24,000.
Yeah.
So even if this, if this is our low, and this is our higher low, all right? And we put another higher low here, for example, so we do something like this, all right? And we continue to rise for some, and we drop from there, then, yeah, possibly you have two scenarios here on your hand, on the macro level, that one drops, if you drop, for example, 25%, all right, in here, where do you come? You come comfortably to this support area here, because this right now area is a huge resistance, all right? And then if you reclaim this area as support, then it will be, huge support. This is where the yearly open is. This is, where everything is. So if you reclaim this as support and you drop from here, then yes, this is the first area that you look, as you say, for an oversold bounce. So something like this, probably reject here again, and then start to roll up. Okay? Because let's face it, okay? Where is the point where the market is going to hurt most people? Where is the point? Is it, for example, here? Is it, for example, here? Or is it here? Where is the point where most of the people will turn bullish?
Around 52,000.
Yeah. And where is the point where most people will turn bearish? Right?
At the bottom, 25, 28.
So above here, bullish. All right? Below here, bearish. It's simple as that, I think, in the sentiment of the people. Okay, because here, as you can see, you already know this. We have another structure here, all right? So this structure was support, now is resistance. Okay? Support, now is resistance. So if you see, for example, on Twitter, when we do something like this, and we reclaim this level, and start going up, right? And everyone says that, oh, this is it. This is it. This time we are going to break, 45,000. We are going to 50K. Everyone is euphoric, right? You have to remember that this level here, right? This level here, this level here, and this level here, and this level here, right? These anchor levels are all levels where market makers have their shorts, okay? This is no 100x, shorts here. These are all shorts that are very, very low leverage, 1 leverage, 2 leverage, 3 leverage. And these positions here, the market maker can comfortably hold up to here. He doesn't care, right? You have to understand that the market maker always trades both sides. Many people ask me how the institutions trade. Well, first of all, the institutions do not open and close positions, all right? When you hear this, that, the institutions take positions at the start of the quarter, at the start of the year, all right, at the beginning of the month, for example, all right? Institutions take positions. What do they mean? They mean that they start to move capital in the market, all right? So what they are doing is that, they can take a position here long. Here they can take a position here long. They can take a position here long. They can take a position here short. Why do they take a position here very short when they can still long here, long here, long here, long here? Why do they take a short position here? Because when they start from here and the price moves there, all right, based on their risk management, this is overextended for them, okay? This for them is overextended. So what they are trying to do, instead of utilizing stop losses, all right, they reverse trade with other accounts in order to have positions, all right, to reverse the price down. You may have heard this, but this is called, the art of hedging, and all the institutions are always hedged. And they are not only hedged on the trades that they take, they are hedged also on the assets that they have. As you will see, you will listen for that the institutions are hedged, for example, in gold. They're hedged in oil. They're hedged in commodities, They may trade, stocks. They may trade Forex. They may trade crypto, but they are hedged in gold. Why they are hedged in gold? Because even if the price moves against them, even some catastrophic event happens like, World War III or whatever, they know that they can, have their reserves ready in gold in order to buy positions when the market favors those moves, okay? And this is something that, as a concept, yes, it is very, very difficult for a retail trader to do, for us, all right? We do not have, for example, the capital, or we do not have the knowledge, or we do not have, the broker to go and buy gold, for example, or buy commodities or whatever. But instead of doing this, we can always think more rational and say to ourselves that, okay, I bought, for example, Bitcoin here, all right, or I bought Bitcoin here, okay, all right. How am I going to protect my investment? How am I going to protect my investment? If you buy Bitcoin, for example, on spot, okay, you are always long, correct? You're always long. There is nothing else you can do. You are always long, all right? So if you do, for example, and this is very, very basic technical analysis, for example, which shows, support and resistance levels. Everyone can learn it. Everyone can do it on their charts. It's not, rocket science. But let's say that you bought here and you are approaching this level, this zone, for example. Okay, let's say that you are approaching this zone. Okay. You do not want to sell your spot Bitcoin. You do not want to sell your spot Bitcoin. So what do? You can open a no leverage 1x, for example, leverage short here. Okay. If you care about your sats, then you can open a short here. All right. As price moves down, you are covering the loss of your spots. As price moves up and hits, for example, your entry here or here, depends where your entry was, all right, you close the trade and you continue to make money on your spot Bitcoin. And then you move to the next zone and you open, a short here. As price goes down, you hold your Bitcoins because you are covering the losses from your hedge, from your short here. All right. What is this offering you? You do not want to make money from this trade. All right. You do not want to make money from this trade. You want to make money from this trade. Right. You want to keep your Bitcoin as long as possible. Right. As long as possible. All right. So imagine yourself that you are, here. You do not want to sell your Bitcoin, even at these levels, at previous all-time highs, for example. All right. And you open a short. You do not have to catch the top. You open a short here. You open a short at $62,000. Okay. And you hold this short. And you're still holding this short. All right. You have to ask yourself, do you really care if Bitcoin, goes to 10K or 5K? Do you care? No. Why you do not care? Because your buys here are protected from here. All right. And then you can comfortably, if we drop and we go to a level that you see very, very nice to buy Bitcoin, let's say 25,000, let's say 28,000, you can add more Bitcoin, all right, but still holding the short. You will hold the short until the price goes, to your entry point of your short. Until price reaches that level, you do not close your short. You will not make money from the short. This has to be clear. You will only make money from your spot buys, from your spot longs. All right? What we are trying to do is never to be in an area where you are losing shit tons of money without the ability of doing nothing. All right? Without the ability of doing nothing. All right? So, for me, this is how I trade. All right? I always hedge. I always try to search for entries that I can cover my belongings, my future trades, or whatever. So, for example, right now we have one short from 68,800, we have one short from 53,000, and we have one short, from 44,000 or something, if I remember correctly. The last short from 44,000 is the trade short. That means that this short is used, to take profits, to compound, to open new longs, etc., etc., etc. The other two shorts, I will hold those shorts until they hit break even because I want to protect my longs. There is no way to swing trade for 2, 3, 4, 5, 6 months or 4 years. All right, whatever it takes for Bitcoin, to go again to 65, 66, $68,000. All right, and do not have the protection of the short to cover it. This is one of the most fundamental, I would say, rules of how I trade and how I enter the market. I will not enter the market even if I see a golden opportunity in front of me, if I do not have, a trade to cover. I always need to be hedged. I always need to have something. It might not be a Bitcoin short, It might not be a Bitcoin. It could be, an altcoin short, for example. All right. Let's say that you shorted an alt at the top. You will need less capital than the spot Bitcoin that you bought. Okay, because alts move faster and they drop a lot more. So you could cover, for example, your longs with a short trade on an alt. But this also requires, for me, I would say, a certain level of experience, because the moment that you start doing this, right, the more it becomes, clear as to how you are approaching the market from a position of strength. And we want to approach the market from a position of strength. We want to approach the market by taking our time, we do not have to, most people think that, trading is that you draw a line, the line says, $35,000, you enter at $35,000, stop loss, 3% below. If you win, it's okay. If you didn't win, bad luck. No, it's not like this. If you have your hedge, all right, you can comfortably look for the bottom and you can slowly DCA. So you buy, for example, 10% at 35,000, 10% at 34,000, 10% at 33,000, and you keep buying as you go down. It's not buying the dip, right? Because essentially you're not losing so much money because you have your short covering. It's like trying to do small, positions on the market until you are comfortable that your average is at a certain point that you can comfortably, be positioned in the market, having an average that covers you, and you can use these spot buys to hold them, for the next years. All right? Why? Because you will always be covered. There is no way that Bitcoin will move, 10%, 20% in a day and hurt your belongings, hurt your P&L, hurt your profits, right? And for me, this is something very, very important. All right? I hope I made it clear. I don't know.
Yeah, man, sounds good. Sounds really great. And that's the kind of info, that I want to give out to people. So I really appreciate your time, man, and sharing your knowledge.
Whenever you want, we will do it again. Just make requests, what people want to see, how they want to proceed, and we can take it up from there. All right?
Yeah, sounds good, man. Sounds great. I'll get you on
All
Discord.
right. Thank you very much for having me. It was an honor. It was a pleasure.
Ah, man, pleasure was all mine.
I'll see you on Discord, man.
All right.
Bye-bye.
Bye. Thank you. All right, guys. Thank you for sticking with the live stream. I know it ran a little longer than planned, but hey, listen, it's all great info, right? So basically, you have two people talking about the longs, the shorts, looking at a global aspect of the market maker sentiment, how they think, how they feel, and how can you protect yourself really against the possibility that Bitcoin can go down and can just ruin your trade. And just like I showed you yesterday, I did post in the trading room like people should be waiting to buy because Bitcoin was going to have another drop, right? Imagine it ruined the entire story, right? Just like I showed you on OMG, it went a bit below the entire buy zone, but because we know the sentiment, we know the theory, and we know the price action, we know that it's going to play out again because they do it over and over again. It is, I'll admit, it is difficult to pinpoint exactly what they're going to do, right? But that is where the theories come in that you study. That is where your time pays off. And take a look at this, the chart right here, okay? Now, I never posted a call on OMG until the purple box because I saw a strong bounce, okay? And then I asked people to wait. I actually got people in my DM asking, is it good to buy OMG at $5? I said, no, you gotta wait. Okay. Now, why did I say that? Why did I post the call right at the purple box? Well, take a look at this range. When I drew the trend line, the price action failed to get to either side of the trend line. And then when it eventually did, it got rejected pretty hard. There's a lot of wick action. Said, you know what, just wait. This was most likely going to happen again. It was going to drop. Why? Because other coins have done the same thing. Bitcoin has done the same thing. So what will the market makers do? Well, first we return to our indicators. Price action is incomplete. Indicators are incomplete, most likely showing bearish divergence. You get out and then you wait. You wait for entry at bullish divergence, and that is where the purple box came in. What happens? You go back, you study the price action, and there you go. OMG did a double bottom. Most likely is going to do it again. Why? Because the price action is incomplete. It cannot bounce off into new highs without having a strong double bottom as in the support. Okay, so that's why I asked Yodas to come in and show how can you trade one asset up and down. What you should be looking at is not just as simple as support and resistance. You just throw some simple lines. You know, go, oh, look, I think this is going to be the resistance and this thing going to be the resistance. No. Why? Because the Fibonacci's, they have a stronger play, a stronger role in the line than the lines you draw. And it goes with the different time frames. And aside from that, what does happen when you see something like this? It's nothing but red action. What does that mean? Okay, where will these people take profits? How is it going to play out? Okay, all those things, they matter, and they matter quite a bit. Okay, now take a look at this. People don't know, but this fractal, I've pulled it out from here alone. But you know what? It fits exactly because this low was lower than this low. Normally you can see that on the price action. Why? Because you've thrown a trend line. Right? So I hope all this info was good for you. I know it's technical and it's very, very over the top. Okay? But this is what I aim to do on this channel and get you aware on not just how to take the trades, but how to also protect yourself against the hedging that the market makers are doing. Because just as we heard from this millionaire trader, is that the market makers play both ways. They always hedge both ways. Okay, so what can we do is we can only protect ourselves by understanding what they do, how they do, and what should we do, how we should manage the risks. Now, he will not get to $1 million without managing risk, right? Why is the reason he's taking trades at a certain level? Okay, why did I tell you just before we went on to the stream, why did I tell you I'm going to take a trade on OMG personally when I see a higher high and a higher low? Why? Because to me that is confirmation. What if I take a trade right here on OMG and it tanks on me? Because Bitcoin is going to go down to do a retest, right? So these are key aspects that you need to learn on technical analysis. Okay, this is where the smartest. Okay, look, this purple box right here is where the market makers are. Okay, they're buying the wicks. Okay, smartest traders are sitting right here at my drawing. They know they can't hit the bottom. They know they can't hit the top. They just go in between with a higher high, higher low, and then bam, you're done. Why? Because they've drawn this exact chart. They've drawn this exact fractal. They have studied the price action and they know what to do and customize their own indicators to understand how the play is going to move. There is no guessing in trading, my man. Guessing is how you lose money in trading. Okay? Guessing is how you lose money. let me show you this. This is what people do. Okay. Yeah, it is a bull flag. Yeah, it's great. But you know what? People buy here because it's at the bottom of the pattern. Where do I buy? I buy right here. 1, the pattern is incomplete. 2, the price action is incomplete. Okay, there's always going to be an ABC and then it's going to move. That is why I wait either to buy at the ABC or when it breaks out at a confirmation low. You can't guess. You can't guess. Okay, you can never guess in trading. If you start to guess, just like this trader showed you, you will lose money. Okay, this is what these people did. You just saw it, he just showed you on Bitcoin. They guessed that the Bitcoin is going down to 20K because they read it on Twitter. They held it for a couple of months and then Bitcoin eventually broke out and took their 3 months short down in one hit. So not only their capital, but also their profits, because they guessed reading on Twitter it's going to go down. Personally, I don't really like to guess, and I just focus on the price action. Okay, to me this price action looks bullish. Okay, I don't need to draw a bull flag. I don't need to find a reversal pattern. I just look at the price action and it looks good. Okay, I'm not interested in this bounce. I'm not even interested on this bounce. Okay, because I've already missed the play, because you can't guess right here what's going to do. What you can do is take a trade either here because this looks better than all these, or take a trade here because this looks better than all these, and then just let it go and look at what the price does. It's a bigger move than all these combined, and that's it. There is no guessing. There's absolutely no guessing, because I find it hard to believe that all these, they hit exactly the Fibonacci levels. I find it hard to believe. Look at it. Every single wick right here, it has a target level. Okay, it's the Fibonacci's at different levels, at different time frames, where to pull it from, how to pull them. To me, this is no joke. So personally, there is no guessing, not for me at least. Alright guys, I hope this info was useful for you. And it just so happens that when you live stream and when you share a screen, it's just that the YouTube has a function on its own that is not clear. Whenever I've watched live streams of other people, it's the same thing. It's unclear. Okay, so whenever it's uploaded properly, you will be able to see a better vision on the numbers, the quality, the resolution will be better. Right? So, like I said, I'm pretty new at this in YouTube, and with only 100 subscribers, maybe over 100, I don't know. And we got a guess, man, and a millionaire trader, no less. So stick with me, all right? It is because of your support that I have someone who wants to come in and talk to you guys about how to succeed in trading and do the best and make the most money that you possibly can. All right, so guys, hit the like button, the subscribe button, and the notification bell, because you heard from this trader himself. He wants to come online again, and if he comes online, more people will come online. You will learn a lot more, and you will get a lot more detailed info which will help you and protect you against the market makers. All right, so, and do me also one favor, pray for the people in Ukraine, and pray that this whole crazy stupid issue gets resolved ASAP. And when I say ASAP, I mean ASAP, yesterday. Okay, pray with me, guys. No one should die because someone is obsessed with God knows what. Okay? So, join the Telegram group. The link is in the description below. Okay? If you need tutoring, hit me up on Telegram. I will help you out. And there's also a small calls group where I do post a bunch of trades and I give the best and the secure entries possible and on the best coins that I can find. They will not only stay stable, but they will also make you gains even though when Bitcoin is dropping. Just like API 3, I pushed this coin for over a week and a half. Okay, I pushed this coin for over a week and a half. I was talking about it ever since at $4 and it was playing this range right here. Okay, and then I eventually went on to say, okay, look, between $4 and $5 accumulate because this thing is gonna blast. It was holding well against Bitcoin. It was hedging well against Bitcoin. And that was one of the reasons. What do you know? Very next day, 120% gain that gave. And the people in the group, they made about at least on average 80%. Okay, so that's only if you want to join, but I do hope you come into the group because there is a lot of info to be shared. People are very generous, they're very kind, and it will help you out as well. Okay, so that's it for today, guys. Look for tomorrow's episode. There's also going to be something else. And in the meantime, I'm going to study the market, do some research, and plan to